Now, investors in Nigeria's Treasury bills have been met with higher rates as the 364-day paper has risen again to 23.5% from 23% in the latest auction on Wednesday, November 20th. A total of 640 billion naira was offered to investors, with subscription hitting 1.17 trillion naira. Now, the 364-day paper in particular was oversubscribed with 1.12 trillion naira going after the offer of 540.45 billion naira. Now, Victory George, investment research analyst, Meristem Securities, joins me now to discuss this further. Victory, good morning to you. Many thanks for joining us this morning.
Thanks for having me.
Right, you're most welcome. Well, let's begin with your interpretation of investor sentiment around the 91-day and 182-day being undersubscribed, and then we also have the 364-day being oversubscribed.
Yeah, thank you so much. So, from the activities of the Treasury bills auction, investors have continued to demand more. With more of the buyers towards the 364-day paper.
Yeah.
And this is just in a bid, to take advantage of the higher rates on the 364-day paper. And looking at the activities of the auction, from prior auctions that we've seen over the past month, the CBN, has continued to, allot higher, than the offer at the last auction and also the auction before it. And the last time we saw something like this was around July. So the higher supply, during this period, coupled with investors' rising demand for higher rates, looking at what inflation, the uptick in inflation, which is also spurring, inflation, investors' demand, seeing that the real rate of return, has continued to be negative. So, and that's basically what played out, at the auction yesterday, and saw the stop rates, increasing to 23.5% from 23% at the previous auction. Right,
so we saw a rollout effect from that. Well, I mean, now we know that the true yield of a Treasury bill is pretty much the return on investment at its maturity. How popular would you say that T-bills are as a security option for this reason?
Yeah, the T-bills now is basically one of the most popular investment options for investors because it's quite safe and backed by the full faith of the federal government, and it's also very liquid. So investors would always want to play in that space, particularly because of the higher interest rate environment currently, which has continued to fall. The higher risk that we're seeing on money market instruments like this, and basically because it's safe, and investors now are rest assured that their investment are in safe hands, and they're also going to get very good returns.
Right. So of course the safety is also really important, and that's going to be a key driver.
Yes.
Right. But I mean, talking about popularity, how attractive is the true yield of the 30.71% of the 364-day bill?
Well, looking at a true yield of 30%, comparing it to what is obtainable even across other instruments or even across other markets. Looking at other SSA countries like Ghana, Egypt, the returns on Nigerian Treasury bills is very much attractive. But like I mentioned, looking at the real rate of return, considering what inflation is doing, currently at 33.88%, the real rate of return has continued to be negative. But regardless, the returns on Nigerian instruments, are very much attractive.
So speaking of volatility, how concerned should Nigerians be? Because you just spoke about inflation, and of course we know that this, has its own effect. But how much concern should we have about volatility when you're looking at that space?
Yeah, we continue to explore the drivers of yields in the T-bill space or in the fixed income market, and one huge determinant would be the government, the fiscal authorities' bid to keep rates attractive, to continue to attract foreign investors, and also try to stabilize prices, speaking to inflation now. And since inflation has continued to be on the uptrend, the authorities continue to do everything possible, to make rates attractive for investors to come in, and also to attract FX into the country, which is one of the drivers of the country's inflation. So with all that playing in, we expect that bearish sentiment to persist, and rates at the fixed income space continue to be elevated and attractive to investors.
So there's no cause for alarm there. Well, I mean, for Nigerians interested in investing in T-bills at the primary level, we understand that, of course, there's a minimum of 50 million naira. Now, for those who can't invest that much, what other ways can they take advantage?
Yeah, for investors that can't, play at the 50 million level for the primary market, there are other options available to them. Particularly, in-house and Meristem, they will have our products where investors can bring in as low as 1 million naira to have access to primary market Treasury bills. And investors can also explore, the mutual funds, available, across different platforms where they can, be exposed to Treasury bills instruments.
Is there a reason we have it at 50 million naira in the first place?
Well, 50 million, is by regulation from the the authorities,
yeah.
And saying that T-bills is not it's not the kind of instrument that is not quite available to every member of the public, and it's the government basically borrowing funds from the public. So I'm looking at the volumes that the government is looking at. Maybe that's why the the minimum amount is at that.
Right. Well, as we know, inflation in Nigeria is rising again, and we know MPC has been hiking rates. What's your outlook for the rate trajectory on T-bills in this environment?
Yeah, like I mentioned earlier, the drivers for rates in the fixed income space will largely depend on first of all what the benchmark interest rate is, and there's a monetary policy meeting coming up next week, I think Monday and Tuesday, and where the decision will be taken on the policy rate for the country, and looking at the other drivers, like different things will be considered: the country's rising inflation, what FX is doing, the government's borrowing need. So the expectation is that we'll continue to see that hawkish stance likely, and that will continue to spur a bearish bias in the fixed income market.
But what about bonds and other money market instruments? What's the direction in terms of rates, very briefly on that? Yeah,
looking at the bonds market as well, it's basically mirrored what is going on in the T-bills market. As at the last bond auction, we saw rates, the marginal rates on the 2029 bond and 2031 bonds increasing as well. For money market instruments, market liquidity has continued to be a huge determinant of movements in rates in that space.
All right. Well, Victory, you're the bearer of good news then. Well, I want to thank you so much for joining us today on the Global Business Report, and we'll see you again very soon.
Thank you so much.